Hi there, I'm Ben Jones. You're watching Dukascopy TV. We've had lots of data releases from the UK today, including the unemployment rate, going up for the first time in 10 months to 7.2%. Joining me on the line to analyse this and other releases is Danae Kyriakopoulou from Cebr. To begin with, Danae, let's talk initially about this unemployment rate figure. It's gone up to 7.2%. Many were expecting it to stay as it was. Why do you think that it's gone back up, and what could have influenced this?
So the first thing I would say was that even though this has been the first rise in 10 months, it's not an entirely odd release. So unemployment has gone up from the 7.1% rate reported last month, but this is just a monthly change, and it's generally quite volatile. If you look at the change on a quarterly or annual basis, the unemployment rate has fallen by 4 percentage points on the quarter and by 6 percentage points on the year. So it's not against what we were expecting, and it's still consistent with the ongoing strength in the UK economy.
Now, what's the significance of today's unemployment data in the context of the Bank of England's monetary policy framework?
My initial answer, and rather obvious, would be that it's not as significant as it would have been 2 weeks ago. And this is because the Monetary Policy Committee, which sets monetary policy in the UK, has decided to move into the second phase of its forward guidance policy, in which the dependence of the change in the bank rate on unemployment reaching the 7% threshold has been loosened. So the MPC has now decided to look at a broader range of indicators to assess the overall level of slack in the economy and the labour market. Despite this, the unemployment rate is still a key indicator. And today's news, together with yesterday's news of inflation falling to 1.9%, make this a good week for the MPC. The small rise in the unemployment shows further that there is considerable spare capacity in the labour market, and that the MPC is correctly worried about this spare capacity, and it is justified in keeping rates low for longer.
And finally, we've also had MPC votes for both the interest rate and asset purchases, all being unanimous for no change on both accounts. In your opinion, when do you think this will begin to change, and what factors might trigger it?
To the extent that forward guidance stays the same, we expect rates to stay on hold for this year. Our baseline scenario is for rates to rise in early 2015, but this will depend on how quickly and the recovery that we have seen in the UK translates into the labour market. And by this, I'm not only referring to the unemployment rate, but also to underemployment and, most importantly, productivity. The recovery that we have seen in the UK so far has been very labour-intensive, with firms holding onto their existing staff and hiring more staff rather than investing in capital. And this has kept productivity low. Going forward, we do see the recovery to become more balanced in terms of the labour and capital intensity of production. More forward-looking releases than the official statistics, such as the ICAW Business Confidence Monitor, which Cebr produces, show that employment intentions for the 12 months ahead may have already have peaked. And Cebr's forecasts for business investment have risen as well. So we see business investment rising by 8.6% this year compared to minus 3.7% last year. And this is a bearish estimate compared to what others are forecasting. So we do see the employment growth slowing and wages growth picking up going forward. And this would support our view of rates rising in early 2015. And another rather ignored factor, which would pose a risk to our forecast, is the housing market. So house price growth has been very strong in the UK, especially in London, and there is a risk that this could escalate into a housing bubble. Now, we do not think this is a strong risk at the moment, but if it did materialize, we expect that monetary policymakers would have to step in sooner than we currently forecast.
Danae, thank you very much for talking to us today. That is all we've got time for, I'm afraid. Do stay tuned to Dukascopy TV as we have plenty more updates and exclusive interviews for you. Thanks for watching. Goodbye.